Any other investing mistakes that you'd want young people today to avoid, something that perhaps you had done?
The biggest mistake is not asking yourself why you want to invest. You are this return chaser, you are this wealth creator, nothing wrong with it. Do you define how much wealth you want?
Welcome to Get Real About Wealth, a new podcast brought to you by IndusInd Bank. I'm your host, Sonia Shenoy, and in this podcast, we will dive deep into what it takes to build a solid financial future. Joining us today is someone who truly understands what it takes to build long-term financial success. Our guest is Swarup Mohanty, the CEO and Vice Chairman of Mirae Asset Mutual Fund. And he actually needs no introduction. I mean, he's been in this industry for over 3 decades now, and his leadership pretty much has transformed the company into one of India's top performing mutual funds. Swarup, thank you so much for being here with us.
No, I should thank IndusInd for getting me to do this with you. It's fantastic to be here.
So we have spoken to each other for decades now. I mean, at least for 2 decades. It's been an amazing journey for you. But tell us a little bit about how the journey has been so far and what has the biggest learning been for you so far?
I think when I always say that, you have to do something, you should have done something great in your previous lives to get a fiduciary role as a job profile. I mean, to enjoy the trust of somebody else's money is God sent. And I'm so fortunate to be doing this job for almost 30 years now. And that realization will always remain surreal to me that, somebody earns money and gives it to us to safekeep. Cannot be a bigger job in life. So that's something which is phenomenal about all that we do. And it's been an inspiration. Just the job profile has been an inspiration.
And you've been an inspiration to all of us for so many years now. So were you introduced to the concept of money by your parents early on? Did they have enough in terms of, spending on you? How was your childhood? Like, did you have a good enough childhood where nothing was really left behind? Or was it like, a frugal lifestyle that you lived?
Yes, I led a frugal lifestyle, but I had a blast. Okay, because I studied in a school which encouraged naughtiness. Not many schools do that. And there's a big line between being rowdy and being naughty. If you're rowdy, you're taken to the cleaners. But if you're naughty, you're kind of the star in the school. And if you combine that with a little bit of studies, then you're the right person. And that's how our principal of the school groomed us. So that kind of set the tone to how the persona kind of evolved over a period of time. He taught us one thing is to own up when you are at fault. And that really led us to a lot of things. But yes, being born to 2 teachers, there's that much money at home. What was good about my parents is they were very transparent about the money. Since I knew how much money was at home, there was that much you could ask for, right?
Correct.
So growing up with no pocket money and things like that was very natural. And since they made me do the groceries and all that, so the income and the outflow also was known to me. That was their way of probably teaching me money. And that really helped me in today also. I have my Excel for 20 years.
Really?
Excel is how much money comes in from a salary, where it has gone out. If I've had instances where, you take a home loan, there's a due date call which comes. I can tell you every check, credit or debit on my account for the last 20 years.
So when you started your investment journey, what age were you and how did you start? Because I find a lot of kids between the age of 20 and 30 are still a bit confused whether they should start by creating an emergency corpus or should they look at insurance first, should they start SIPs first. So what is your advice given that you've had so many decades of experience?
So my starting of my career was very different, and I was just narrating that there was that much money when I started. For some reason, again, in my career, I deviated from what my MBA institute offered me, and I wanted a different career. And there I had to make do with a very low salary. With 1,600 rupees, I had to shack out with a friend of mine in JNU. And there was that much money. So I started investing when my son was born. And so it's pretty late. So
what age was this?
So I was, I think, 28 or 29.
Okay.
I think my wife will shout at me for not remembering the right age of my son. I mean, that's how it is. I started then, but still then it was too less.
Okay.
I think that's my only regret that I have. And because I didn't start early, the pressure on me to really save or invest was large during my mid age, and that's when I had to really buckle up and cut down a lot of things to put money aside.
But that's interesting, because I would assume that somebody like you who's in this profession would have started early on. So that's interesting that even people like you make these kind of rookie mistakes.
Sonia, I'll be very honest. I felt like a fool, and I'm just being honest on this one. I was doing a session, and on stage, I realized I'm saying all these things. Am I practicing it? No, I was not. So that's when I went back, did my plan, put it mathematically, and then started a very different journey. But when you might aspire to do a lot of things, Sonia, and just bear with me when I say this. When you start off, you're a different investor, but life teaches you a lot of things, and investing is about your life and your life stage. I think two things changed when after 40, a lot changed for me mentally about investing. After 40, I can safely say I could hold my allocation. Otherwise, I was a market timer till then, brash market timer, and I lost a lot of money due to that. You learn from your mistakes. But
Tell me a little more about that. When you say market timer, what?
No, see, when you start,
what did you do wrong?
No, see, when you start your journey, and by virtue of us being in the industry, you kind of think you know.
Yeah.
The market slowly but surely teaches you that you don't know anything. And that's the time. So invariably, when we started, we were these return chasers. We thought this was an investment. This was a journey of generating returns. But as you mature and you take this journey, you realize there's a risk mitigation process. And the closer your portfolio is to your risk profile, the better the investment journey. And that took its own time. But I think I'm a serious investor to my plan after I turned 40, because you're tested, the market tests you. Like say for the last 2 years, my portfolio return is projected at 12%, 11 to 12%. And for 11 to 12%, I don't think I need the downside risk of say a small cap.
Correct.
But last 2 years, when you're seeing 60, 70% return generated, you are tested on your ability to hold your allocation or staying true to your portfolio allocation of not needing that in your portfolio. I'm not saying small cap is good or bad or wrong or right, but it is not part of my plan. That I can do at this age. If I were younger, I would have redeemed a lot of things, probably got out at the worst time, redeemed at the wrong time. All that would have happened. But now it's very mathematical, very process oriented, and every year there is a review. Sometimes the necessary changes are taken. It's absolutely on the dot. And for the last, I can say for the 10 years, I'm on track on my portfolio.
So you said that one mistake you made is you started a bit late in your investment
Very
journey,
late.
Around 28, 29,
No,
right?
I didn't start putting substantial money. I started late.
Okay. Any other investing mistakes that you'd want young people today to avoid, something that perhaps you had done?
See, I think the biggest mistake is not asking yourself why you want to invest. You are this return chaser, you are this wealth creator, nothing wrong with it. Do you define how much wealth you want? Okay, most people tell me I want to create wealth. Okay, fine, nothing wrong. How much is that wealth? Once you define it and you know why you are investing, where you want to invest is an easier path. So in this process of investing, the first path is your goal. That is your star of your entire life. What is your goal? You have to put a tangible meaning to that money you want. And that will change over a period of time. I mean, people talk about inflation being the biggest public enemy. I think the lifestyle inflation is a bigger enemy.
Correct.
And nothing wrong with it. I mean, we aspire to do all this, right? But are you providing for it? It's a simple question. Why do you want to invest? Okay, I want to buy a car. Nothing wrong. Once you know you want to buy a car, where to invest becomes easier.
Correct.
For all you know, you have the money in the bank already. Then you don't want to get into this complicated world of investing. But otherwise, it's a mindless journey. You can get into wrong ways and get into investments which you don't need, actually. So the biggest mistake I made was not asking myself. These are the two mistakes I made. I mean, not starting early and not knowing what I was doing. And a lot changed after the birth of my son. I think, nothing happens till it does not happen to you.
Yeah.
Then I got a meaning, okay, his education is there. Maybe I will need some money for leading a different life and all that. Then some purposes started forming. Today, I can dare say at that point of time, due to lack of internet, a lot of this information was not available to us readily. But that's not an excuse. I was already in the industry. But today, everything is there at the button of your phone. Of course, the phone doesn't have a button. That's a separate issue. But it has a click,
We
right?
move past that.
Yeah. That's how life is changed. I mean, that's the story. I mean,
Yeah.
initially, if you have to simplify life, it can't get simpler than that.
So there are two things which you have a very strong focus on. One is retirement and the other one is insurance, right? I
Yeah.
want to talk about that one by one. First on retirement, I mean, this
Yeah.
whole FIRE concept, anyone I speak to wants to be financially independent and retire early. So are you, financially independent already? And how much money do I really need to retire early?
See, how much money is dependent on everybody's life. There is no definition to that, right? I think I got to know very early in my life when I moved to commerce. My parents grilled it into me saying that we will have pension. So we are not dependent on you. Don't think we are pushing you somewhere since we want something from you. So very early I knew that if I were taking this route, I would not have pension. Right. And by virtue of being in this industry and reading a lot of things, the requirement of that kind of money came very early in my life. And at the end of the day, your money should outlive you. And we are not young, we're going to live longer. When I was young, a 50-year-old was considered very old.
Correct.
I'm 54. I think I'm just getting warmed up. Okay. We don't feel old at all. Right.
Absolutely.
Right. And so if you're going to say live to 80 or say 90, those last 10 years, trust me, your only friend is money. Right. You can do whatever. At the end of the day, unemotionally, that is the only friend you have. And you need a lot of money then. You might not need money now because you're physically fit. I can go and still earn money.
So what is a lot of money? There's lifestyle inflation, there's medical inflation. And now increasingly people are having only one child. So there is that as well. Like you don't have this whole social infrastructure which perhaps our previous generation had. So given all of that, how much would I need in today's day and age to, to comfortably live till the age of say 70?
In Mumbai, you should start with a 10 crore upward without any liabilities, is my opinion. If you're going to live at up to 80, 90, because your medical insurance will not cover you till that age. And when you go into the hospital, the questions that are asked are known to you, right? And then the hospital bills are just piling. At this moment, this is my opinion, and I think I'm right on this one. We're still a very cheap medical spending country. You go to any country now, you see the cost that you incur. And in the next 10, 15 years, some amount of that inflation will come into Indian medical bills also. You have to prepare for that. So that's where I would start at. But it depends on your life. My personal opinion is if I'm going to slog for 40 years, I would want a better life post-retirement, contrary to a lot of discussions that used to happen that post-retirement you should lead a different life. No, I want to lead a better life because all you aspire for at this moment is some time. And it's very difficult to accept that fact that my time is not mine at this moment. Right or wrong, I'm not commenting. But when I have the time, I would really like to do a lot of things. So I will need more money post-retirement than now. That is for sure. If given that, then the money I will need will be substantially higher than the figure I put on the table.
Wow. Okay. So 10 crore is the amount that we're looking at, right? If you want to lead
That is basic.
Okay. That's basic how much you need
I know
to
people freak out when I put this number, but you put the maths, right? It's very simple. Let's look at it this way. Suppose you do the maths on how much you need for your fooding. And food inflation is real. Two inflations are real. Food inflation and education inflation.
And medical.
Inflation. Medical is yet to happen, I feel. Right? It will happen very quickly. And then with the penetration, think about this. The penetration of insurance in this country will take up the medical costs. That's real. And the penetration is beginning to happen. More than your life insurance, I do not know. People in India put a far less amount on their life than they're worth. That's something they need to think. Because a crore or two means nothing to your family if you're not there. It's a reality. And in money, please, there are no emotions when we talk about money. So please keep that as the underlying in everything I say.
I think your statement went viral when you said that you have a 4 crore health insurance for just you and your wife, right? So, I mean, what is the amount of health insurance that I would need living in a metro like Mumbai, for example? Are you those, slightly on the paranoid side that you've raised your insurance to that much, or is it the ask of today?
No, I think two things happened. My father went through a medical treatment for 5-7 years through cancer. The amount of money which went out, we only knew, but he was not covered for those. So one is to prepare for that. I do believe in India, that's a large amount, I will confess. But then COVID did its own thing on the mind, India is, earlier there used to be before Christ and after Christ. For Indians, it's before COVID and after COVID. I think I was coming out of that. So I think maybe I would be on the higher insured side in India, but that's me. It's my life. Maybe I will not need 4 crores. Maybe I'll tone it down to 3 crores, but I will not come less than 3 crores for sure. For my between me and my wife. That's for sure. My son is outside this. He carries a 75 lakh separate insurance, plus the office covers him for a bit.
So what does money mean to you?
I think money is a mean to build some aspirations, lead a different life, and then it also means a lot of security to me. I had a threshold that this much money should safeguard me for the rest of my life. Please, I repeat on the fact that I don't have pension. So I'm creating pension. So after that threshold, yes, I've started leading a different life. No, I don't drive very large cars, nor do I aspire to do that. But I would like to broaden my life and lead a far broader life through money. And it's not an end to everything. I use it to my means is where I come from.
So do you think that, there's this whole cliche, right, that money doesn't bring you happiness? I think otherwise.
It
because
does.
It brings you a lot of happiness,
does.
not just to you, but to your family and people close to you as well.
It provides for everything that you define as happiness. I have no qualms in admitting that. If I want to travel and I see new places, because I think my biggest investment has been my travel. Meeting different people, meeting different cultures has broadened me as an individual, taught me things which I would have never even thought of staying in India. These are different lives, those are different lives. Me going to Seoul, I go to Seoul twice a year. That is, of course, from the office, but meeting them has made me a very different individual. For 13 years working with the Koreans, as I am a Korean now. But when you go and meet different people, their cultures kind of teach you everything. It's my biggest investment in life is my travel and meeting different people.
I don't think too many people know this, but you are, I think, the only non-Korean in the leadership at Mirae at the moment.
Yeah.
At a global level.
Yes.
Okay, that's fabulous. I mean, how has that been for you?
No, I think it's very incredible. When I joined Mirae Asset, I must tell you this, and Vetri, I don't think Vetri remembers, but Vetri had told me that Mr. Hyun Park, who's our chairman, is a forward-thinking Korean. And I got the meaning by forward-thinking Korean is he's very clear that leadership positions outside Korea will be handled by non-Koreans. And that does not come naturally to those countries. You can check the data. And I'm the first, I will not be the last, I can assure you that. I'm lucky to be the first that here's a gentleman in Korea who 27 years ago was a private equity fund manager. In 27 years is a global investor. Trusts me with his business in this country, and that really means a lot. And you aspire to kind of make good that trust every day you come to office. But it was a surreal feeling when it came in the papers in Korea. And people were congratulating. Being the first, of course, you're talked about in Seoul also. I get covered a bit there, so it's still not sunk in. But when you go there, they treat you very differently. And being the first is always special.
It's always a nice feeling. But coming back and just closing the loop on the earlier conversation we were having about creating wealth for yourself, right? For an average, say 20-year-old, 20 to 25-year-old, and I think nowadays people are a bit more lost, although there is a clutter of information, people don't know what to do. I mean, there's like an information overload right now. What would your 5-step guide be for someone who's just starting their investment journey?
See, I think what you said is correct. The clutter is real. And the art is to simplify life within that clutter. Easier said than done. It takes us a long time, right? But you see, any successful product around you or anything that is sustainable is the simplified version of everything. So when that cluttered word, first, foremost, ask yourself what you want from your life. Because what you want from your life, Sonia, is very different from what I want from my life. And that's the right way. Otherwise, we would all be robots, right? Ask yourself what you want in life. Once you have that clarity, the rest is very easy. It is not, though we say that, you should know your risk profile. It is not easy to know your risk profile because your risk profile changes with life, with situation, right? And then that's right. You discover your risk profile with life. Okay. But some amount of risk taking, you must know what is good, what is not. There are checks on that. And then investing will teach you that, right? After that comes the plan. of where you must invest. According to your why, your where will happen. That is what we call asset allocation. And after that comes selection. More often than not, people select first and get into products which may or may not suit them. So if you can just reverse that, and there's so much to Google, so much to read. Read up yourself. There is just a financial plan is a button away. Do your own planning. Read up. Nothing wrong with it. And the young are so good at reading.
Yeah.
Though they are shorter versions of reading, but they read a lot. So maybe they could do a lot of introspection before coming here. The more you introspect, more you know about yourself, the better investor you become, is my simple submission. And they are capable. I have a lot of respect for the young. Their knowledge is up there. Their confidence. I wish I had that confidence.
Same.
I wish I had that. And you combine the two, your investment journey can be so successful, so much better than. And please, because of them being in a socially superior status than, say, I was or my generation was. We are the cusp generation.
Yeah.
My father came from a generation which was very risk averse because of their background. Money tomorrow was not a certainty.
Correct.
So they behaved very differently. Because of the fixed income regime going during my working life, I was pushed to the capital markets.
Correct.
Otherwise, in my first half of my life, I was getting 16% from fixed deposits.
Oh, wow.
What more do you want, right? And then you pushed here. So you start learning. But the young, because of their their economic superiority, are far different risk takers than we were.
Yeah.
So the kind of places they can invest naturally does not come naturally to us. So that's something.
But do you think in that way there's some kind of analysis paralysis that the young generation is going through, because there's so much FOMO about investing, B, there's so much clutter of information. Do you think it was simpler maybe 10, 15 years back where, you just invest in an index fund and you sit tight?
So I don't agree to that. I know there's a lot of discussion on that, but whenever we go to buy anything, the basic Indian asks ki aur dikhao. The Indian loves clutter everywhere excepting investments. That's not fair. The more products that are there, the more possibilities that are there.
Right.
But within those possibilities, making sense of a portfolio is the art. There's an art and science to it. Science is probably doing the asset allocation, but doing the right asset allocation, the art. And it comes over a period of time. So I am a big fan of more products, more avenues, because it was not there for us. Maybe we were not better investors. Maybe this generation will invest far better than we did. And I have no doubt on their acumen. I mean, their acumen is far superior to us. My son is 25, so I learn from him every day on this part. Their confidence, their approach is I respect that. So I am a firm believer that when you're looking at India and you're looking at 60% of world population under 30 in this country, it's a possible fact that these young Indians will teach the world a lot of lessons.
Absolutely. I want to talk about that. But before that, I also want your thoughts on women and investing, because you made a fairly controversial statement, which I endorse completely, by the way, that women will far outlive men or their spouses and perhaps will need more financial, backing or support as they grow older.
Yeah.
What is your take on that?
It is true. Global studies say that 80% of married women live longer than their husbands, right? So they will need money. First of all, they should know the money. Many women I meet, and I'm just making a general statement, don't take me otherwise, do not know the money because it's in the hands of the husband. But it is a fact that they are better at budgeting than the husbands, right? There's this big saying that, globally, if there were more women finance ministers, there would be more surplus budgets. Because surplus budgets happen at home, and definitely the home budget is not with the dad. The home budget is with the man. So they know money. It's not that they can't. So I will never agree that women can't make money. They know how to. It's in their blood. But they have not extended to investing. But from a need perspective, if you're going to live longer than your husband, you better know your money. It's something, if you are not doing, then the odds are heavily against you when you reach that day. And again, I repeat my statement that at that point of time in your life, your only friend will be money.
That's true, actually. at any point.
I'm sorry, I'm sounding very morbid, but that's the truth.
I think a lot of people don't think about this, and these are the conversations that we must have, right? I mean, the fact that you may outlive your spouse either way.
You will.
Yeah.
You will. See, men are great. They will die. They will live. They will go away. So there's nothing wrong with us. The women have to think.
Correct.
And then sooner they think, better.
But women investors, the ratio has actually gone up. I mean, the percentage of women
because
investors
the working women is increasing, right? And see, India is a fantastic story on women. So we're seeing that on the rise, and with people like you talking about it, you're an inspiration, right? When you start talking about it, more women will hear you than they will probably hear me. So I leave a lot on you.
I hope so.
For doing this one, okay?
But, I mean, of course, that is one angle, like women.
Yeah.
Their contribution has gone up. The percentage of women investors has gone up. But overall, if you look at it, Swarup, we have 20 crore mutual fund investors in India right now. I mean,
5 crore unique.
5 crore unique, yeah.
Only.
And 140 crore people. I mean, where are we going wrong? Why is India still so under-penetrated in terms of mutual fund investment compared to the rest of the world?
So that's the thing, the Indian market, see, it's the only country which will double its economy in the next 10 years. Best way to get that double is through the capital markets. And you talk about it every day, right? But very few people are listening to us. Indians are busy fulfilling aspirations. I mean, you have 4 TVs at home and you discuss a 10,000 rupees SIP, 20 questions come to me. Oh, this is risky, that is risky. For all you know, you don't watch 3 out of them, right? But the need to buy a TV is far easier than need to invest. So somewhere we have to work harder, talk more. Maybe we have to do more of this and generate the need for investing. And which is very large in a country which does not have social security. And with the kind of inflation both on food as well as lifestyle inflation, and every Indian aspires, and rightfully so, to lead a very good life. The need for investing for that needs to be talked more is where I come from. So maybe for the next 10 years of my work life left, this is all that I will do. Just try and get a new investor every day, and I'll
more
be
financial
happy.
inclusion.
Yes.
So where do you see the mutual fund industry? I think now there's a 50 lakh crore AUM that
67, 68.
Oh, we've reached 67, 68. Okay, that's amazing. So at suppose 70 lakh crores we're talking about now, right? How do you see this grow? How do you see the industry grow over the next, say, 10 to 15 years?
See, I think the investing entire environment will be like a pyramid. At the bottom, we'll have the participation. And that's where bulk of the investors come, right? They will want the market for themselves. They can have some core funds coming in and probably this birth of passives now, where people will participate. I mean, if the economy will double, you just own the index, you're going to make money, right? So, and thanks to the digital part of the world growing the way it is, investing is no longer very cumbersome.
Correct.
Right? So that will lead to a very interesting, unfolding of the real investing universe. But the bulk will go there.
Correct.
After that, people will probably realize and want to customize investments, and then they will come to us for the active. Probably people will go to some other differentiated forms, and probably there also some of the factor investing which is coming in now, they can probably come in there, tailor-made products. And above that will be the rich investing in very in very nuanced products or evolved risk products like PMS, AIFs, and probably other asset classes. Art is making a very big inroad. Yes. I've learned it over the last 2-3 years. But these parts are getting structured as we speak. With REITs now, people can approach investing in real estate in a different manner. If you go 2 years ago, the hoarding from the Gold Council was invest in jewelry. As you go inside Mumbai today, the Gold Council ad says buy gold ETFs.
Okay.
So the financial inclusion or financial investing will take a very different pattern. But I see this going to, 5 crores going to 20, 25 crores very quickly from here on.
So Gen Z, since you're talking about them, right? Everything is so different.
Yeah.
Their investing styles are different. Their music is different. Their food is different. But for someone like you who's in this business, and a large part of the investor community and the spending community is now Gen Z.
True.
How are you catering to them?
I think it's a very interesting realization that going forward, the bulk of our investors will be that generation. And like if you reflect on what we discussed, their economic background is different. Their risk-taking ability is different. So hence the products that we have to give them will be extremely different. Otherwise, they will start investing in other products which they desire. Nothing right or wrong about those products. Is what they want, right? So I dare say that from here on, the products that are there in the market may not have any relevance to them anymore. That's where we are standing on. And I have this very stark realization about this. I know I'm right about this one. So our cliched products of multi-cap, flexi-cap, large caps may not, and I'm pretty sure will not appeal to them.
Why would you say that?
They look at riskier products. They look at, I think it's instant gratification also there. They want something which is more jazzy. So things which will appeal to them rather than boring. Till now, investing, and I do believe it's the right process, the more boring you make it, the better outcome it is. But that's not how they are. And we have to cater to them. Otherwise, they have other avenues to invest. Bitcoin is bigger for them than mutual funds is a fact.
Correct.
Right. Now, it's up to us whether we want the money or not. Or we say Bitcoin is right or wrong, get into it. It will not matter because we're not going to get that money. Now, if you want that money, then we have to place products which will be good for them.
Like what?
Like say, I think some of them are taking very nicely to factor investing right now as we speak. And there's, I think factor investing, for me as a manufacturer, it'll be very interesting to see this big comparison between active investing and factor investing in the next 10 years. Let's see how it unfolds.
For people who don't know, do you want to just quickly explain what factor investing is?
Yes, I think it's a very interesting concept of imbibing rule-based investing to an index. The beauty of active versus passive, and if I can take 2 minutes of your time, active investing is where you give your money to a fund manager and there is a fund portfolio which has a fundamental strategy on which that portfolio is created. Now, when it comes to passive investing, wherever there is an investable universe, we can create an index on it. And through factors, which are rules, you can give multiple permutation combination of that same rule. I'll give a simple example. Suppose there is Nifty 50, which is the largest index of this country. I will say, no, Nifty 50 is not good. To the young, I'll say, okay, I'll give you Nifty 30, the top 30. It's a slight deviation, which I think can appeal to them. I will say, okay, no. I'll give you Nifty 30 momentum, which is stocks which are really doing well. I'll pick up 30 out of that, out of 50 and give you that 30. Somebody will say, no, let me not give you momentum, let me give you quality. I'll define quality and take out the best quality balance sheets out of those 50. That's factors. Or I can combine the two, right? So the permutation combinations which I can give through factors is unlimited.
Correct.
Right? I think those are products which they will be more attracted to than a large cap fund is my thinking. And I don't think I'm wrong in that because it's the only country which has 5 crore mutual fund folios compared to 10 crore broking accounts now.
Correct.
We are reverse. They have taken to direct stock investing and I am a big fan of direct stock investing. At that age, if you can back yourself to learn which stock to buy, you must back yourself. If you do it well, fantastic. If you don't, we guys are there to help you. Come to mutual funds.
So a lot of data shows that only 20% of Gen Z is actually actively saving for retirement. I mean, even when I was that age, I really never thought about retirement. So what would your advice be to them?
See, because their access to information is so large, I would really advise to read. Right? It's great to lead your life, and you should lead your life. Nothing wrong with that. But if you can, at that age, part a little bit of your money, a mistake which I had made, and keep it aside in the capital markets, a lot can happen on this process. You don't need to invest a lot of money. Just 10%, 15% of your take-home salary can do wonders. And please, whether you read about investing or not, please do read up the simple process of the power of compounding. Please do read the rule of 72. It's a game changer in everybody's life. Just these two simple things can change your investing or your approach to investing dramatically. And it's at your phone, right? But read up a little. The sooner you start investing, easier it is. And through this, make this life of yours, no?
You want to tell us about the rule of 72 and how it can change your life?
So, your return, 72 divided by your return gives you the number of years it will double your money. right? So suppose your return is 12%.
12%.
72 divided by 12 is 6. So in 6 years, you're going to double your money. You put that, and everybody loves to double money, right? You put that in your mathematical investing process, your outcome is known to you. And then you build your goal to that, no? It's very easy. See, guys like we will make it look very complicated to show that we all are important. We are not. You learn your mathematics and put it in your investing, your life will become so easy and everything that you want can be achieved through this process.
Then why do you like active funds? I mean, you can just simply sit with a passive fund, get 12% returns and move on, right? Then why do people like you advocate even investing in active funds?
No, that each to his own, right? Like I said, investing is evolving. At one point of time, you would want a certain style of a manager. Here there is a rule, and that rule is applicable to everybody. Now, by virtue of the mutual fund industry being there for 30 years, there are different fund managers now who have evolved and give you different investment styles. And because of the transparency of the industry, it's available for you. If you want to take that, why not? I'm not here to tell you this is right or that is wrong. What suits you and what you want. There is a product for you in the market. If you want to come to us, great. Otherwise, owning the market is brilliant. I mean, if you read John Bogle, he tells you on the contrary that there is no way you can, his statement, not mine, no way you can match your long-term investments to active because the fund may or may not be there, but the index will be there.
Absolutely. So, I agree with that. I believe in that concept. Yeah. Large part of my money is in passive funds.
But, so yeah, imagine my life. I led a big part of this 30-year career of mine learning Warren Buffett, who is active management. And then I learned John Bogle. And it's fascinating how these great two individuals have made money for their clients through different processes, completely contrasting from the same underlying market. Right? So each to his own or her own.
Correct. Absolutely. No, but for Gen Z, right? I mean, just to complete that argument, since your wealth management business is targeting a large part of Gen Z as well, there's so many of these new concepts like, say, a loud budgeting, where Gen Z likes to live a frugal life, and they celebrate that. So how does investing fit into all of this?
If it's frugal life, then investing is more important because, see, one thing which all of us, and I harp on this basic thing, is that we are going to live long. You're not going to be young for some time. And in your good days, you prepare for your bad. These are days where you're physically so fit, you have to prepare for those days. When you're not physically fit, I'm not talking about financial health at all, I'm talking physical health. At one point of time, at this moment, I am forced to go to the gym because I want to survive another 30 years, not for anything else, right? Before that, if you're prepared for it, your life becomes very easy.
Okay. Well, since, we were talking about living long and this whole financially independent, retire early, all of that, right? You've been in this industry for 30 years now?
Yes.
And you don't have any plans to retire?
No, I love doing what I'm doing. See, first of all, I had not thought that financial inclusion will start in India. So I thought, chalo, I'll finish my work and go home. But now when I'm seeing this story unfolding, I want to be part of this story.
You want to be part of it?
Yes.
And so you're saying that you are financially independent, but you don't want to retire
Kind of independent, not yet. But at that point of time, see, life also teaches you and takes you to different stages. So some other things I can do if I continue working. Why not? The best part is I love what I'm doing.
Okay, Swarup, before we end, let's do a quick rapid fire on a couple of issues, right, that everyone's talking about. One is renting versus owning. What do you prefer?
Early stage renting.
And the future of AI?
See, if you feel AI is going to kill you, it will.
Important things that a couple need to speak about in terms of money.
First, talk about money. Talk about the total money. Most of the couples don't know what is the total money. And thirdly, discuss every year about how much money you have. More important, be transparent about money.
And for you, what is your goal, say, your money vision for yourself, say, over the next 5 years, 5 to 10 years?
Next 10 years, I want to wrap up my investing journey and then create a passive income for the rest of my life.
Okay, and your biggest investing mistake and your best investment that you've made so far?
Not starting early was my biggest mistake. Best investment was Mirae Asset Emerging Blue Chip in 2012.
Okay, all the best. Thank you so much. It was a pleasure speaking to you, Swarup. Really enjoyed this conversation.
Thank you so much. Doing it with you was so special. Really appreciate you and IndusInd Bank for doing this one.
And that's a wrap on today's conversation with Swarup Mohanty. I hope you found his insights as valuable as I did, from balancing growth with security to how health planning plays a crucial role in building long term wealth. If you enjoyed this episode of Get Real About Wealth, make sure to follow us so you don't miss out on more conversations with financial leaders and experts.